we talk about climate risk, there's broadly two main categories. The first is the physical, so the direct effects. Climate change is affecting businesses, whether through hurricanes, forest fires, flooding, etc. And then there's also the indirect effects, so a carbon tax or uncertainty about how regulation is going to go through, how consumer preferences are going to change. These are all things that can also affect a business. And when we're talking about banking, we're really thinking about the investments that they made and how much those are going to be affected by climate change. So essentially, when we're talking about risk for banks, we're really worried about a situation where they make investment, they expect to get a certain amount of income per month, and then they unexpectedly have less than they're predicting. And then it's hard for them to then make the payments that they've promised other people. So whether it's climate risk, whether it's inflation, whether it's interest rate risk, essentially making sure that banks are thinking about the risk holistically, they're considering all possible scenarios. The reason why I'm so interested in banks is because they're really the heart of the economy. So if the banking sector is affected, that could potentially lead to a recession because they're the ones who lend to businesses. And what's a challenge with banks is they're so integrated with each other. So if one bank is affected, they lend with each other. So then maybe they have a hard time paying back another bank. And then that bank now is affected as well. And then another challenge with this area is essentially the unexpected feedback effects. So one example of this is a carbon tax, which it's pretty clear to think that would affect the energy sector. So if I'm in a bank and I'm lending to the energy sector, of course I'd be worried about the carbon tax. But what can also be affected is other industries. So for example, if there's a carbon tax, if energy is more expensive, if food prices are more expensive, people don't eat out at restaurants as much. So the restaurant sector, even if there's fully compostable material, even if they're green in all ways that you would be thinking about, a carbon tax could affect them indirectly because people have less disposable income. So for one of my projects, I look at US banks and whether they're thinking about hurricanes when they give out household mortgage loans. Because basically there's expecting to be a doubling of severe hurricanes by the end of the century in the US. So banks should be thinking about this, especially in areas that are higher risk. And that's largely what I do find, where in general, banks are adjusting as the climate science comes out on the kind of increased concern about hurricane risk. But what's important is it's not the same for every bank. So for some banks, especially those that are affected more by the financial crisis, they're less reactive to this news. So they're effectively taking on more of these loans that are exposed to hurricane risk. So if we're thinking back to financial stability, that might be more of a problem because those are the most fragile banks. So they should be kind of reacting the most and reducing their risk the most to this, but it seems as if they're preoccupied with trying to get enough cash to think about kind of more conventional risk, that they're sort of neglecting this emerging risk. For my research, I think there's a couple takeaways. So for businesses individually, potentially they're going through a lot of difficulty, there's some kind of crisis, and it makes sense to focus on it. Focus on the thing that's coming up in the next month. But after that crisis is over, think about the things that you neglected and kind of catch up on the things that you weren't able to do. More broadly, I think what's helpful is allowing for nuance. So I think often with this discussion, it's very binary. It's we definitely have a problem or we definitely don't have a problem. And that can be really enticing in times of uncertainty where we really want someone to say, we for sure are going to have this. But I think what's more realistic is a more nuanced take where we may or may not have a problem and that problem may or may not be large and there's a chance that it could go a certain way. And then so when we're a business, I think it's helpful to have that perspective of it might not be the worst case scenario and it might not be the best case scenario, but it might be somewhere in the middle and we should prepare for that situation.